Happy Monday, everybody. As I mentioned last week, we have a few of these Mondays again until President's Day, then no Monday in the work week for market again. Until then, let's tough it out. Today is January 22nd, 2024, and this is your On Location Monday Market Update. We had another big week last week, so let's recap last week and preview the upcoming week. Monday, once again, we had markets closed, this time for Martin Luther King Jr. holiday. Stocks were lower from the start on Tuesday as eco data from the ECB, talking heads was hawkish. U.S. 10-year Treasury yield back over 4%. Bank earnings part 2 began, and Morgan Stanley disappointed. Markets took them down. Goldman and PNC Bank were in line and pretty much unchanged. U.S. eco data and Canadian inflation data did not bring buyers back in, and the Fed head Waller pushed back on expectations for a March rate cut. Markets rolled over and saw session lows in the afternoon before another sharp reversal, mostly technical levels here, and the markets moved near the upper half of the day's range. Seemed bullish to see the strong reversal and buying into the close. At the end of the roller coaster, we had the Dow down 2/3%, S&P down 1/3%, and the Nasdaq down just under 1/4%. Stocks went back on the downside as markets opened on Wednesday, as most overseas eco data was the excuse of the day. Chinese consumers were not reported to be as healthy as previously thought, and this was as retail sales growth slowed from 10% plus to under 7.5%. I love how the measuring stick for China is always different. We would love 7.5% retail sales growth, or maybe we would not. Good news is bad news, remember? Maybe. So we'll see. Euro eco data smelled of increasing inflation numbers again. This was all to sour the mood early. That was all that we needed. Then as U.S. markets opened, U.S. retail sales numbers came in strong, up 0.6% versus an expected 0.4%. Got that? China was down to 7.4%, and that was horrible. And the U.S. is up 2.6%, and we view that as too hot. As I've been saying, the odds for a March rate cut are still coming down, not just as I have told you, but for real in the pit of Chicago, starting the week with a 75% chance, but by midweek, near 50% chance. All of that and late day buying still came in. Markets finished at best levels today, still down and still down for the week. The Dow was down 1/4%. The S&P and Nasdaq were both down about 0.5%. By Thursday morning, stocks looked like they would add to the 3 days of negative market action. Dow looked down at least. S&P and Nasdaq looked like they'd open up. Techs and banks, the earnings moved things as markets opened. Apple with an upgrade from Bank of America, and Taiwan Semi had earnings that were better than expected. Note that they were good, but remember the bar has been lowered, and so many companies are going to beat that lower bar. We'll see how close the market pays attention. Eco data came in that Goldilocks area and no impact on the Fed expectations. Fed head Bostic did comment on Q3 being the possible time for Fed rate cuts. In the end, stocks were strong, led by the techs again. Dow up 0.5%, S&P up over 0.75%, the Nasdaq up 1.33%, all respectable, but nothing too crazy. Friday came along to wrap up the short week. Before the open, things looked up for the markets. Markets all opened about 1/3% higher. We did get Fed head Goolsbee reminding markets to stop listening to Fed heads. Now get that, and listen to the data. He is a non-voting member, but the media loves to quote him, but to decide to listen to him and stop listening to him. We'll figure that out. Maybe we can get back into the late 1990s when there was no Fed head talk in the media and only the Fed release, no press conference. Only the CNBC Greenspan briefcase indicator. If you want to know about that, please ask me to explain it or Google it. Big name research was all over the place on Friday, too. UBS says stocks and bonds still have room to run, and BTIG, another research house, said that the Mag 7 could see some downside. Neither of these are revelations, more noise, all of this, and by the end of the day, we had a very strong close. The Dow was up 1%, S&P up 1.25%, and finally hitting a new high, breaking the weight since January of 2022. The Nasdaq was also up 1.75% on the day. All three markets closed positive for the year. Let's look into this coming week. This week brings big names in earnings. I'll just mention a few. Headlining Tuesday is Netflix, Wednesday is Tesla, and Thursday will be Intel. Add in there United Airlines, Verizon, and even T-Mobile, and we'll have plenty to chew on. As for eco data and inflation info, remember Goolsbee tells us to pay attention to the data. Service PMIs giving a read on the service sector, one that has been so important to watch. Flash manufacturing PMIs, a good read on manufacturing. Jobless claims claims, still very important to watch, even in a GDP read for those still watching for a recession. As we like to say, one of the Fed's favorite inflation indicators, the PCE and core PCE, that's coming out as well. Speaking of the Fed, as you may notice, no Fed heads this week. They're in a blackout period until next Fed meeting, January 30th, 31st. As far as we can tell, and this is why I think the earnings will be coming out will be the focus, but there is little surprise that the Fed should deliver between now and March. Just chatter. Recall that the Fed in this day and age does not like to surprise markets. Any move in rates will be a surprise, so meetings will be the chance to talk up Fed policy. Watch for minimal changes to statements, and I suggest we'll see less market-moving press conference content as well. I think we have until March before things get too exciting on that front. So as we move into another week, I still think we'll focus on earnings. Oddly enough, markets are staying strong, even with the odds of that rate cut pushed into the second half of the year, something that was unheard of even just 10 trading days ago. For now, please keep in mind our focus is about reaching our goals. The day-to-day and even week-to-week are not as crucial for the long term, so please let's get the 2024 meetings in place. Let's set those goals, and while you're at it, check out the Friday videos on planning. Another good one's coming this Friday. For now, stay in touch and have a great week.